All right, so now we talked about the statement of information, talked about the statement of no change. Let's talk about the federal employer identification number. So when I talked about LLCs, I mentioned that you don't need to file for an FEIN or federal employer identification number if you have a single member LLC, which is an LLC with one member. But if you're looking to make the S-corporation election, which is the whole point of this video, then you do need to file for an FEIN or EIN, whatever you want to call it. It is required to have that in place. You can't use your social security number to then make the S-corporation election for your LLC. You have to have an EIN in place for that entity that you form initially. So it could be an LLC, could be a corporation, could be a partnership, what have you. You need to have an EIN for that entity to then make the S-corporation election. Okay, so now we're getting closer. We can feel it, we can smell the S-corporation election. We're not quite there yet. We still need to file for an EIN, and let's take a look at what that process entails. The website for the EIN registration will be included in the description of this video, but you can also fill out form SS4 to make that happen. Let's take a look at what that form looks like. And it's a little bit of a beast, okay, a little scarier than the statement of information. It asks for name of the business, what kind of entity it is, and you also have a reason for applying here. It gets quite detailed, and often business owners are intimidated by the SS4, but the good news is you can actually go online and go through this application for an EIN on the IRS website. Now, the fact that I'm filming this at 2 in the morning would mean that I can't show you this tool because it's actually not available outside of business hours. So as you can see, the online assistant is currently unavailable, but it asks you a lot of the same questions that are on form SS4. So once this tool is up and running, you can basically go through the process, and within about 15 minutes, you can have an EIN. Best of all, it's free. There's no charge for it. So once you have your entity set up at the state level, you go on the IRS Employer Identification Online Tool website, you register for it, within 15 minutes, you have an EIN, and you're feeling like $1 million, okay? Because now you have a business entity, now you have an EIN, you're well on your way to that S-corporation holy grail, okay? Stay with me. All right, so once we have the employer identification number, you need to take into account that additional employer identification numbers may be required at the state level, especially if you want to have employees, okay? So wherever you're located, you want to make sure that you register for the proper identification numbers at that state level, so for payroll purposes, they can have you on their radar. And when it comes time to do payroll, you already have those numbers available. You don't have to scramble at the last minute. All right, so now I feel like we need a drum roll here because the whole point of this video was S-corporations, and we're only getting to that on step D, okay? But we do have to cover these other aspects. They are important, so make sure that you don't skip them. And this brings us to the S-corporation election. Now, I want to say a few things about the S-corporation election. If you look on any financial website or any tax website, they're going to talk mounds about how special and beautiful the S-corporation election is. And business owners read that and think, as soon as I form my business, I want to make it an S-corporation. And there are a few problems associated with that. And what I find is very often business owners make the S-corporation election way too early. The reason is that while the S-corporation election may provide some savings in terms of Social Security, Medicare taxes, it also has additional costs that go along with the election. So for example, if you have an S-corporation election in place, you may be required to be on payroll or salary for what's known as reasonable compensation, okay? If that's the case, then you're gonna need to have payroll taken throughout the year, which is an additional cost. On top of that, it's always helpful to have an adequate system of accounting in place to make sure you're keeping track of income and expenses in a prudent manner. That's another cost that comes into play. And furthermore, as I mentioned earlier, you're going to have a separate tax filing being an 1120S that you need to file every single year, and the penalties for not filing it are very high. We're talking about they can reach $2,400 before you blink. So definitely want to make sure that you keep track of those requirements, and that's another cost inherent in having an S-corporation. It could very easily be $800 to $1,000 just for the annual filing of the S-corp return. So if you add all those costs together, all those administrative burdens being the payroll, the accounting, the tax filing, and so forth, let's say those add up to $5,000. okay? Or let's not get too crazy. Let's say it's 3,000 altogether. Let's say the total tax savings, because you made the election early and your business isn't all that big and the revenue isn't all that high, let's say the tax savings is $1,000. Did you come out ahead or not? Not really, because the tax savings did not amount to the additional costs involved, so you actually ended up behind when all was said and done. So some businesses, it makes sense to wait a little while before you make the S corporation election, because there is some flexibility as to the timing of that election. And once your business grows to an adequate point, then it would make more sense to make the S corporation election, because at that point, the income tax savings would outweigh the additional costs you have in terms of accounting, payroll, tax filing, and so forth. And at the end of the day, you actually end up ahead by making the S corporation election instead of behind, because the additional costs involved would exceed the tax benefits. So don't rush necessarily in making the S corporation election. Instead, what's prudent is to sit down with a tax professional and say, look, here's what the first 3 years of my business are expected to look like. Here's what the income is going to look like. Here's what I expect the expenses to look like. Let's see what makes sense and what's going to actually provide the best outcome for you when all is said and done, because it's not necessarily making the S corporation on day one. All right, depending on how your business is structured, that may cause more headaches for you than it creates benefits. Trust me on this. I see it all the time. Business owners make the selection generally way too early. And once you've established that, hey, for the first 2 years of my business, maybe it doesn't make sense, but at the end of that second year, hey, revenues have picked up, net income has picked up. At that point, you can do some planning and say, okay, at this point, it makes sense moving forward for my business to be structured as an S corporation. But certainly, if it's day zero and you expect your first year to produce $5,000 in revenue, or some smaller number that's not necessarily going to have the S corporation benefit you, then it's probably not the right thing to do. And the rule of thumb that I like to kind of throw out there in a very general manner is that the S corporation election really starts cooking from about $100,000 to $150,000 of income before the owner pays themselves. All right? That's when the benefits generally start to outweigh the costs. Not the case in every situation. And don't look at this as some kind of law of S corporations. That's not what I'm trying to put out here. But if I hear that a business owner expects $15,000 of revenue in the first year, then the S corporation probably is not going to make enough of a difference for them from an income tax perspective to outweigh those additional costs involved that I mentioned. So definitely want to do some analysis. Make sure that the S corporation election even makes sense for you before you move forward with it. Because what the IRS definitely doesn't like is when business owners make the S corporation election and they decide they don't want the S corporation and kind of go back and forth. Okay, they really hate that. So once you make the election, you definitely want to make sure that you're going to stick it out for a long period of time. And the way you basically guarantee that is by making a prudent decision in the first place. Okay, so definitely put some thought before you jump to the S corporation election. It's done usually way too early, and it kind of kills me to see that some businesses are weighed down by that decision because it was made in a hasty manner. So definitely take some time to think this through and work some numbers with the tax professional to see when and if the S corporation even makes sense for your business. So can any business make the S corporation election? Not really. There are some specific requirements pertaining to S corporations that you need to take into account, because if your entity does not meet them, then you cannot be an S corporation at all. Let's take a look. So right here on the IRS website, again, I'll include this link in the video description below for you. You can take a look, and it has a good rundown of some of the requirements applicable to S corporations. So it says here, to qualify for S corporation status, the corporation must meet the following requirements. These aren't optional. This is in the tax law. And you have to be a domestic corporation, which means that it has to be based here in the US. You have only allowable shareholders, and these may be individuals, certain trusts and estates, and may not be partnerships, corporations, or non-resident alien shareholders. This is crucial, because if you put together an S corporation and then somehow it ends up that a non-resident alien shareholder has acquired a stake in that S corporation, that may blow up the entire S corporation election. It could be a disaster. all right? It could affect the S corporation itself and the shareholders because it's no longer going to be classified as an S corporation if you violate one of these requirements, okay? So it's crucial to keep in mind. Has to have no more than 100 shareholders, all right? I often get the question, well, if S corporation is so great, why isn't every corporation an S corporation? Why isn't Microsoft an S corporation? Why isn't Google an S corporation? Now, first of all, I actually made a separate S corporation video that outlines some of the downsides associated with the election. So check that out if you haven't seen it. I'll put a link in the video description. But this is the reason that big companies are not structured as S corporations, quite simply because they have more than 100 shareholders, okay? Microsoft could have millions of shareholders, all right? So S corporation election, not an option. Similarly, and this one's crucial, S corporations can only have one class of stock. And let's talk about that for a second. I recently had a client reach out to me, and one of the ways that this person and their business partner wanted to structure their business is that one would own 50%, the other would own 50%, but the way they wanted to split the profit from the business was that one would get 60%, the other would get 40%. That does not work with S corporations because the profit sharing percentages have to follow the ownership percentages, all right? So if it's 50-50 ownership, it's 50-50 in terms of the profit splitting. So that's something that's important to keep in mind right from the onset because that can cause issues. Similarly, if you have two owners and one owner wants to take a distribution of, let's say, $5,000 and the other owner doesn't want to, that can create a problem because that may indicate that there's two classes of stock. One class being one that pays out distributions and the other class being one that doesn't. That will violate this rule that we have here, which is S corporations can have only one class of stock. Now, what that generally means is that if one shareholder takes a distribution, the other shareholder needs to take a distribution, and everything needs to be even. So if you are looking for a net income distribution allocation whereby the ownership, let's say 50-50, doesn't align with the profit sharing percentages, which may be, let's say 60-40, an S corporation doesn't even make sense from the onset for the reasons that I discussed. So a lot of things to take into account, but make sure that these requirements are met by your entity because if they're not, it can blow up the S corporation election altogether. So really important stuff. Now, the last requirement that we have here is that your entity may not be an ineligible corporation. So what that means is certain financial institutions, insurance companies, and domestic international sales corporations may not be S corporations. Now, I have no idea what a domestic international sales corporation is, but if that's what your business is, then make sure that you avoid the S corporation election because as I mentioned, if you violate any of these requirements, then that can blow up the S corporation altogether, okay? So these are very crucial to keep in mind. And the other thing is about 100 shareholders is that it may start out with 100 shareholders, but then what if one of the shareholders dies and then he has two beneficiaries that each acquire a stake in that S corporation? Uh-oh, that might be a problem. So there's a lot of things that can occur that can invalidate an S corporation election. So similarly, let's say that there were no non-resident alien shareholders initially when the S corporation was formed, but then one of the owners died and the person who inherited it is a non-resident alien shareholder. What happens then? It's a good question. A lot of things need to go correctly for the S corporation to be maintained over time. So certainly take that into account and know that there are specific rules and requirements as to which businesses even qualify for the S corporation election in the first place. So once you've established that your business does meet the requirements and that S corporation election does make sense for you, the form that you'd use to file the S corporation election is Form 2553. Now, here is another point of contention that often confuses individuals. There used to be the requirement that if you are going from LLC to S-corp, you'd have to actually take 2 stops to get there. You'd have to make an election to have your LLC treated as a C corporation, which necessitates the filing of one election all by itself. Then you'd make the election to have that now corporation treated as an S-corp. Okay, so it would go from being treated as LLC to treated as a corporation for income tax purposes to treated as an S corporation for income tax purposes. So that two-step process, I want to make very clear, is no longer necessary. So if you want to go from LLC to S-corp, you go straight there by filing Form 2553. Let's take a look at what that looks like here. All right. So this is Form 2553. This is what you have to file to get the S-corporation election in place, regardless of whether you're starting with an LLC or starting with a corporation. It's such a common point of confusion that people think that they need to have that two-step process to go through to get the election. No longer applicable. 2553 is the only form you have to worry about. I'm not even going to mention the other form because I don't want to cause confusion, but that's the situation. So the Form 2553 asks for some really basic information. This is the election by a small business corporation. Again, don't get confused there. Even if you have an LLC, you can use Form 2553. Any business entity to be considered as an S corporation can use Form 2553. All right, so going through here, they just ask for information regarding the business. They ask what kind of tax year you're looking to have. Most taxpayers choose the calendar year, makes life easy. So moving along to the second page, you see that they want information about the specific shareholders, the number of shares or percentage of ownership, dates acquired, and so forth. Gets pretty detailed on that end. And pretty much most of this other information is not going to be applicable in most situations. Usually you're going to be focused on the first page here and the second page for the most part. The other pages can be applicable, but if you're choosing calendar year, you're basically working with these two pages. Now, how do you file Form 2553? And as you can see here, the IRS has provided some updated information that's applicable after 6/17/2019 as to where you mail this form. And the question is, can't you file electronically? Unfortunately not, because you need to have the signatures on there of all the individual shareholders, and they're not accepted electronically. You got to file it on paper. Send it via certified mail with tracking. Do yourself a favor. So it says here, if the corporations, again, doesn't necessarily have to be a corporation, can be an LLC. Don't let that throw you. It can also be a limited liability partnership. They're just talking about the basic entity that you have in place. If it's based or its principal business, office, or agency is located in, let's see, we're talking about California. So we'd mail it to this address. And I'm not a huge fan of faxing documents to the IRS because if their fax machine doesn't have ink in it, it's just not going to print. No one's going to look at it and no one's going to care. So definitely send it via certified mail with tracking, and that's going to be your best bet. Now let's talk about timing. Form 2553 must be filed no more than 2 months and 15 days after the beginning of the tax year the election is to take effect. Okay, so if you wanted the S corporation election to be effective for, let's say, tax year 2020 for the entire year, in that case, you have to file the 2553 no more than 2 months and 15 days after the beginning of the tax year. The beginning of the tax year for 2020, if you're using calendar year, is January 1st, 2020. So by about February 15th, that's when you're going to have 2 months and 15 days. So do it as early as possible. Get it out of the way. You don't want to file it directly on the deadline. Just trust me on this, okay? If you want to make the S corporation election, do it nice and early, close to the beginning of the year as possible. Allow time for the processing and so forth to all go through, and you should be all set. Now, similarly, you can also make the election at any time during the tax year preceding the tax year it is to take effect, okay? So for 2020, we can make the S corporation election for 2020 at any time throughout tax year 2019. So basically from January 1st, 2019 to right around February 15th, 2020 is when you can make a timely S corporation election using Form 2553. Now, there is a provision for late S corporation elections. That's beyond the scope of this video, but just know that it is out there, and under certain circumstances, you can have a late S corporation election approved. Now, the question is, do you want to go through with it? There are certain considerations there. That's neither here nor there. But you also need to take into account that some states may require a separate S corporation election to be filed at the state level. So even though you filed the 2553 at the federal level, some states may not accept that filing. So specifically offhand, and this is not a definitive list, don't quote me here, but New York and New Jersey generally don't recognize the federal election, so you need to make those elections separately at the state level. I know we're talking about California, but let's be kind to the East Coast. We might have some East Coasters watching, and I myself am from New York, so it's all about the love, all right? Okay, so now that we've covered the 2553, essentially you file that form either on the preceding tax year or within 2 months and 15 days after the beginning of the current tax year for which you want the election to take effect. And you must keep track for S corporations of those requirements, because otherwise you may run into issues there. And overall, life is good, man. Which means I don't know what I was going to say next.